Hello everyone, my name is Bridget Ryan and I will be going over chapter 14, lessons 1414 to 1420. In this part of the chapter, it talks about real property taxes, expenses for vacation homes, what classifies properties as rental, real, or vacation, the use of homes, and tax forms that you use to deduct the expenses and fill out when you're filing your taxes. With real property taxes, they are assessed by local governments and are based on the fair market value of the property. Taxes will support general public welfare by providing funding for local public needs like schools and roads. These rates are based on financial needs for the year. So those needs will be based on different local public schools, roads, or other things that are needed in that area. There's a limited itemized deduction of $10,000. So if it cannot be expensed other ways, you would be able to opt into a limited itemization that will not exceed $10,000. Taxes paid through escrow holding accounts with mortgage lender, and how that works is monthly payments to the lender include an amount that represents roughly 1/12 of anticipated real property taxes for the year. Then the mortgage company will then pay the property taxes with the money in the escrow account. If someone were to sell during the year, it changes the deductions based on how many months they've spent in that property for the year. Also, the taxes would be split mainly between the new owner and the seller. For the use of the home, there's 3 categories, which are residents within minimal rental use, so personal residence, residents with significant rental use, which is a vacation home, and non-residents, which is real property. Based on these, people also can opt in non-tax costs of a second home. So if someone is fortunate enough to provide themselves with a second home, the cost on it would be the initial cost, maintenance cost, inconvenience of dealing with renters or property managers, and they would be subjected to a consequence as a resident and on the number of days the taxpayer rents. So the minimal use for a home is going to be 14 or fewer days, with significant use of 15 plus for non-residents. As you see here, there's minimal rental use, not required to include the gross receipts and rental income, and they are not allowed to deduct any expenses related to the rental. They're allowed to claim as itemized deductions. So if you live in a property for more than 14 days, then you're subjected to these limitations. However, if you have a rental property, this would be the cost that you would put in it. So how you find your mortgage interest, your other expenses. With rental revenue, it's going to be included in gross income if resident is rented for more than 15 days. Expenses to obtain renters are fully deducted as direct rental expenses. So if you have entertainment and other things that allow renters to use your property, in personal use, not deducted except under non-rental tax provision. So if you have personal use expenses, you can only use non-rental tax provisions. This has been disputed between the IRS and tax courts on how to allocate particular expenses when it comes to rentals based on if it's a rental expense or if it's a personal expense. So to further expand on rental expenses, it talks about the different tiers that are needed, and deductions are based on these tiers related to the rental expenses. by the deduction sequences, and then Exhibit 1412 actually does a really great job in giving a good example in the allocation for the rental use. So it breaks down, as you see here, the different expenses that might be used. It gives what tier they would be in. So you have these in tier 1. This section is tier 2, and then tier 3 is going to be depreciation. So you want to get a total of these expenses so you'll know what you're going to be using. And it breaks down each method because, as mentioned, there are disputes between each method on how to allocate. So you see there's different numbers up top and down here. So the depreciation is going to be the same, but in tier 1 and 2 there's going to be different layouts on how each method is used. This is also part of the exhibit, and it just shows how you take the expenses and your total itemizations for the rental with your rental expenses in it. This is going to be the tax form that's used. In the section 1420, it gives a clear description of the broken down total itemizations and rental expenses along with this form on how they input these exact totals. So this tax form is taking numbers directly off of this exhibit and putting them in here. So it gives an understanding of where each goes. So you have advertising, which was right here, 500. And you see it goes right there. So this is a great form to look at and exhibit to compare it to on how to input numbers. This is just a continuation of that form. Overall, this part of the chapter talks about real properties, rental properties, vacation properties, expenses, deductions, taxes paid, and forms that are used in the taxes. Thanks so much for watching.